So first of all, thanks a lot to every one of you for joining in. I hope you're all off to a fabulous start to the new year. We're all super excited to kickstart another year with the CXO Forum, the Automation Foresight 2022, to discuss and lock down the defining trends within automation for the year ahead. As you're aware, we at Zinnov have been at the forefront of unraveling this evolution of intelligent automation, the consequent impact on enterprises, and really separating the noise from the signal. As most of you are aware, we've been doing these CXO events consistently, and this is the fourth such event in the last 12 months, and we've only grown from strength to strength, right? In terms of the agenda for today, we have a power-packed session. We'll kickstart with a quick Zinnov POV and do a rare view of the year gone by. And then we will have an open forum discussion where we will present the top foresights for 2022, and then we will orchestrate an open discussion with all of you. The automation space has been shaping up for a very long time. And while the early days really began with API-led automation of interaction between system of record applications, we saw this emergence of robotic process automation, or RPA, as a bridge to connect legacy systems, especially for mission-critical workloads. And finally, we saw the advent of low-code, no-code platforms to modernize the legacy applications and truly democratize automation. This focus on siloed technology areas later paved the way for convergence of multiple technology areas, which were further augmented by process preparation technology such as process discovery and IDP. And with the coming together of automation and AI, the enterprise narrative is fast changing from process or task automation-led productivity to decision automation-led business outcomes. And all of this is encapsulated in this wrapper for organizational readiness for a holistic adoption of automation, including more and more clarity on ownership for automation, ability to justify the business case, and secure funding for automation, addressing change management course, and building the best fit ecosystem of platforms and providers. So this is what we're referring to as the new automation DNA. In terms of the market size aligned to this automation DNA, we are following a TAM of around $300 billion. And out of this, the enterprises have realized less than 10% currently, with current spend of more than $22 billion. Out of this, platforms have a 55% share at about $12 billion, and the remaining being taken up by the services ecosystem. Now, this is a vibrant space, as we all know, and we are currently tracking more than 1,400 platform companies buying a share of this pie across the multiple technology areas. We all know that automation has been a red hot space for acquisitions, and we are tracking more than 175 such deals across the automation technology areas. And more than 3/4 of these have taken place in the last 3 years alone, right? And as many as 50 in 2021 alone. So again, massive traction with respect to the whole mergers and acquisition activity within automation. Even in terms of the VCP funding, an insane amount of funding has been poured into automation. We are currently tracking close to $50 billion in overall funding raked in by the automation platforms till date. And this is again across the technology areas, as we can see. Digging deeper into the private equity scheme of things, we see that the PE investors have been hyperactive in this space. And this is especially amplified in the last 5 years. There are more than 50 such deals that we are tracking, including both investments and acquisitions. And a sizable amount of these deals have happened in the last 5 years alone. We see that the PE focus is spread across the automation technology areas, and different theses for these PE investors, with some going the breadth route and aiming to augment existing assets and build a more holistic platform, while we see that the others are really going in for depth across a particular technology area. So this is the automation space unfolded in 2021 with immense action and traction all across. And consequently, 2022 is poised to be a phenomenal year for automation. So here are the top 10 foresights which are expected to shape up the automation space going ahead. We had, of course, pre-shared some of these with you as a pre-read document. So what we'll do is we'll walk through each of these trends and open the floor for discussion after each of the trends. So looking at the first foresight, as we all know, the interest rates are at an all-time low currently, with the US federal fund rate hovering at the 0% mark. However, majority of the policymakers are in consensus to start increasing the interest rates starting this year. And we expect this to go up to almost 1.25% by the end of 2023 and as high as 2.5% by 2025. So given this background, what is happening is that the enterprise reliance on external capital will be strained due to increasing cost of borrowing. Hence, enterprises will need to rely on increasing profitability, especially focusing on new revenue and cash flows. And this is where automation will become vital as a revenue and profitability driver. We have analyzed the Fortune 250 enterprises, and those with a very high focus on automation are able to grow their profit per employee almost 7 times more as compared to those enterprises who are not investing into automation. So in order to discuss this further in detail, Eric, if I can bring you on and if you can provide your perspective on this, whether this rise of interest rate, right, will it help the enterprises truly realize the value of automation as a revenue driver and hence push them to adopt a more deliberate strategy towards automation? So it'll be great to get your perspectives on this, Eric.
Hey, thanks, Nishay. So I think, first of all, from my perspective, the world's moving so fast that it's hard to even have the charts be up to date. Your previous one where you have like 1.25% on the federal funds rate by end of 23, I think most folks today would say that that's probably going to happen in 2022. So interest rates are definitely going to be on the rise, although it's hard to perfectly predict the future. It seems like it's changing every month. So if that does play out, there will be a lot more pressure on organizations to automate. Rising interest rates, and I think the kind of economic surge we've seen coming right out of COVID, likely we're going to see higher interest rates at a time when economic growth starts to slow. There's already a lot of pressure on not having enough people. So I think pressure on organizations to go further on automation will be high. But I think the other side of that is that the 15 or so firms, 1,500 or so firms you track in automation, I think the other thing that companies are going to be doing is they're going to be wanting to consolidate down the number of providers they work with. They're going to be want to get more efficiency out of the automation investments that they're making. And they're going to want to bet more on fewer providers. So back to another thing you talked about early in terms of consolidation of the industry, I think while there will be more demand for automation, it will be more demand channeled to fewer participants. And so we expect the environment to be highly competitive, to be less fragmented. And part of our strategy is to continue to ensure we have a broader set of solutions, because we believe that's what customers are going to be looking for from single providers.
Perfect. So in summary, more demand for automation and of course, more consolidation that is expected. So great points. Thanks, Eric. And while we talk about this trend, I think the proof points of automation being a revenue driver are still not there, right? So Bobby, if I can bring you on next, how are you addressing this challenge, right, of automation being seen as a revenue driver, right? So, and how are you enabling your enterprise customers to think of automation really as a revenue-led cash flow and not only as a cost-led driver?
Yeah, I think it's, thanks, Nishay. And it's also great to be here with my colleague, Varga Moyed, tremendous thought leader there. What's interesting is we've watched the value props of automation change, kind of fluctuate a bit over the last 5 years. When I joined UiPath 4.5 years ago, the prevailing view was, automation was going to replace X number of FTEs, and that became sort of the equation. But that really wasn't what it was all about, right? That was, it became more of a freeing up humans to do more with their time and to give back to their organizations and be more valuable. I think a lot of the focus there was in back office. With last couple of years, though, I think the focus on front office and sales and revenue has really picked up on customer experience. We spend a lot more time today on the customer experience side, how automation can. I've got a favorite one of mine with Rogers Communications, where they've added additional customer visits every day for their drivers going out to do fixed cable set-top boxes because of automation, right? So that improves the customer experience, improves the driver experience, that drives faster revenue. And so I think the conversations are already on the revenue side. I think that's, in fact, I was on with the retailer in the Northeast US last week, Fortune 250, and the retailer said the same thing in that their focus right now is, how do they make the experience for they have a club pass and, the club returns and all these things. How do they make that more valuable? And automation is a big part of that. So I think that conversation, Nishay, has already happened. I don't think that has a whole lot to do with the changing kind of economic world around interest rates, at least not yet.
Okay, got it. So the narrative around the outcomes from automation is already shifting from more FT savings to more and more experience, including customer experience and so on. So that I think value prop change is already in motion. So it's only a matter of time before the maturity sort of happens. I think totally with you on that, Bobby. In fact, this is a great segue into the next foresight that we have, which is around experience economy. So Prankur, if you can bring that up and take the audience with that.
Yeah, thanks, Nishchay, and great to connect with everyone today here. So I think the understanding on fundamental values and responsibilities that corporations have had have really undergone a massive change, right? So the Friedman doctrine really set the tone with this statement in terms of how the sole responsibility of corporations is to just earn profits for shareholders, and that has been changed really in terms of the narrative around the focus on all stakeholders, right? And this became more formal with the testament coming from almost 190 to plus CEOs of large US corporations that signed a purpose of corporation document in 2019, and it included some of the household names, including CEOs of JP Morgan, Johnson & Johnson, a lot of tech majors and others, to call on the focus on looking at value that companies can drive for all stakeholders, right? And that's where we see automation also playing a big role, where it can drive value for customers, employees, and partners in terms of the newer experiences and enhanced satisfaction levels that they can provide. And Bobby already spoke about customer experience, but we'll just want to expand that to other stakeholders, including internal employees and partners as well. And while I think the company would have to go structural changes to really live up to that that statement of providing value to all stakeholders, but automation provides a very low-hanging opportunity in terms of showcasing some real value and moving the needle in a meaningful manner in a fairly quick amount of time. And we have some case studies on how, in terms of how some of the leading organizations have been driving this focus through automation. So with that, I'd like to bring upon Chris into this conversation, and I want to understand. So Chris, you have talked about in terms of really we have had conversations around how experience is being driven through automation, but how do you really attribute automation being the responsible factor for being able to derive some of these experiential outcomes, right? And experience can also be driven through a lot of other factors. So how are you able to showcase real value that automation specifically is bringing into some of these processes and some of these initiatives and programs that enterprises would be focused on?
Yeah, I think there's a few ways to address this. I'll try to be brief. I know we've got quite the agenda here, but there have been investments that I think everybody on this call, I think we've been making. You can throttle each one of them, but we've been making investments in things like low code, embedded AI, ecosystem connectedness. I think all of those investments were really to remove friction from the experience, whether it was, our customers adopting and using, so the employee experience, if you will, or for what those employees were inevitably charged to do, which is deliver, some level of personalized goods or services to their customers. So the customer experience. I think that's why we're making these investments. I can tell you it's paying off at Kofax. Those investments have essentially allowed us as a business to expand our addressable market by shifting from where Kofax had traditionally been, which is like back office document imaging. But because of the investments in workflow, low code, all those things, we've got customers now that are using us in more revenue uplift, not just cost takeout, but revenue uplift closer to the front office, full use cases that look like home mortgage, wholesale lending, auto consumer lending. And so I think that's like the evolution of most of, the companies on this call, is to move from, the heritage, if you will, into the modern. And that's how we're seeing it here. Now, there's a second piece to this, which gets even, I think, a little bit more interesting. And so this is how we're building a good foundation and a go forward, which is to say, we're no longer focused on just our products. I brought on, a lead for customer experience for Facebook a few months ago, about 6 months ago, and we rebranded a program internal at Kofax that we're calling Experience Ops, XOps, which is to say, we previously had DevOps, we previously had ProdOps, so development operations, product and operations, but the common denominator there was product, not experience. And so this is shifting it from an inside out product out to the market to an outside in, the experience that the market needs from us into how we should be thinking about development and our product go to market. And so now we elevated this. So I actually own this within the strategy office, Experience Ops. And it basically takes together our customer experience program that I own, our product strategy that I own, and the go to market bundled into this Experience Ops process, essentially, that we govern. And that's how we determine what it is we should be taking to market, how it should be priced, how it should be delivered. But we've put experience as the common denominator now and no longer the product. And for, a B2B enterprise, software and technology company, that seems odd, but that's how the market is.
Yeah, no, I think that's a great point, Chris. And I just have a quick follow-up there. So I think the other shift that we are seeing is that I think this change of narrative from automation just being a cost takeout mechanism to actually providing experience for customers, experience for other key stakeholders for the company, will also see boardroom level conversations being centered around automation, right? And given that a lot of companies and platforms specifically, would not have boardroom access at this point, do you see a challenge, and how do you think can some of these platforms solve for it and compete with, say, some of the more incumbent technology vendors out there?
Yeah, so we absolutely see this being a board level conversation now, which it wasn't 10 years ago. But the macro trend, I'm big on macro trend and trying to read tea leaves. So macro trend here, there's a good S&P look. If you look at how the value of the S&P, the value of the S&P back in 1975 was really through tangible assets. So if you had more buildings, inventory, cash on hand than your competitors, then that was your business moat. That's how you won out. 90%, just about 90% of the value of the S&P 500 was driven through tangible assets. It is completely flipped today. In 2020, 90% of the value of the S&P 500 now is through intangible assets. And they categorize that the primary category for intangible assets is software and customer data, and using software on that customer data to deliver the services that the customers need. And so I think this is very telling that a lot of software now is not sort of viewed as a technology, but is viewed as sort of like a means to the end. And that end is generating enterprise value. And at the end of the day, that's to deliver these personalized experiences. The way you get there is through technology. So I think that's why. So it's not just, yes, it's being sort of discussed at the board and C-level, but sort of why is that? And it comes down to how value is created today. And it's no longer through tangible assets, it's through intangible. And that points directly at our enterprise software.
Got it. Well, I think this makes sense, Chris. And just in terms of how experiences can convert into value and that companies can generate, I think that's a great point. Ulf, I think I just have one more question, and I'd like to bring you in for this one. So, and given that you are trying to build a product and capability with the platform around process discovery, the observation we have made is that while a lot of the process discovery sort of workflows are based on looking at more efficiency and productivity scenarios. So in this conversation on how automation is shifting towards experience oriented outcomes, do you see there's a shift in terms of how process discovery itself is sort of imagined, and what are your thoughts on that?
Yeah, no, I think it's if we're talking about process discovery, process mining, it's a means to an end, right? It's the same as IDP or orchestration or everything we talk about. It's means to an end. And I agree with Chris and Nisha, and we'll talk about the customer experience at the center of everything we do and everything our enterprise customers or government customers will do. And more we're seeing the drive and use of our capabilities applied in a sense that was different than before. We talked about that before, so I don't need to repeat it. But it's about customer experience. It's about making life easier for a customer to do what they want to do with this or that enterprise. So it's revenue generating. It's either or it's revenue protecting, or it's a customer experience. Now, the process mining or process discovery part of that, task mining as well, serve one simple purpose, and that is, how can we better understand the existing processes through the digital footprint and make that automation as efficient as we can? And then, best of all, we can measure the impact of that automation afterwards through operational monitoring. So again, it's a means to an end, but definitely, I think you've seen, if you read also the reports from some of your peer companies, your Gartner and Foresight, it talks about, in a way, almost like a renaissance of process mining as a standalone industry, and the purchase acquisitions and investments going on in that industry in the last 12 to 18 months is also a vital testimony to that. But we're seeing a rebirth of process mining exactly because of that, and I think as a subset of that, also task mining, of course.
Got it. Okay. Sure.
I think Carol. You had a point. You raised your hand.
Sure. So, I think that, process discovery, task mining, or process mining in general, there are two main trends eventually that create a lot of demand for the understanding your business. I would call that, regardless if it's mining, discovery, or, any other aspect of that. Organization, as we see these days, changing their approach in regards to automation. It's much more than just a tactic. If it used to be a tactic approach, let's go, department by department, let's have more cost reduction activities. Now the discussion is, let's understand our business first. We can hire McKinsey, we can hire any other advisory, and then figure out what needs to be done or what other companies are doing in order to improve our efficiency or in order to become much more profitable. But it should be based on data. It should be based on understanding the business, understanding the organization, cross-application, cross-human, and cross-robotics. If you would ask me, I would say that the future belongs much more to the data owners than to the execution part. So automation is super important. That's at the end, that would be the main value or the contribution for the cost reduction or the revenue generator. But above all, the companies that would be able to provide clear view of this organization, better understanding their process. There are many touch points for each process, done by human, done by robotics, and understanding the organization, understanding the impact on the organization. One of maybe the third trend that you have, the resignation trend that we see, understanding that human changing their behavior, looking for something different than they used to look, trying to understand what is the value, what is the impact that I, as a human being, can contribute to my company. It's exactly should be based on the data or understanding what is my personal impact on the organization. In order to do that, process discovery, task mining, process mining, again, anything which is related to understanding the business and being able to provide meaningful insights and the ability to act based on this impact, that's the huge value. And again, I think that it will take the automation market to the next phase. Because again, automation is perfect, is good, is doing great. Not great enough, because the market demands much more than that. The market demands to better understand their business, act based on data, insight, and not based on experience or, some consultants. That's my point of view.
Sure. No, I think some of those, yeah, go ahead.
No, go on, Pran.
No, I was just saying, I think even experience has to be quantified and has to be tracked in a more metric-based manner, right? So, I think maybe process mining and just having access to the right data is critical in that for that reason. Yeah, with that, I think we will just move to the next trend, and I'd like to invite Praveen to talk about this one.
Hi, good morning, everyone. Sorry, I joined a little late, and thank you all for joining as part of this community. Really excited to be here. I would definitely want to come back to the question on measuring CX, PX, and EX and attributing it back to automation, because one of the fundamental problems we've been hearing from enterprise customers that in the pandemic, everyone ended up creating a business case around automation solving for each of them, but there's no true way of quantifying it. For example, sure, you can pay your vendors invoices on time and they can be all happy about it, but there are many other factors like that which really end up rolling into a partner experience, and attributing that only to automation, while was okay in the pandemic period, but in a long-term perspective, it feels like a little bit of a stretch of imagination, at least, from an enterprise perspective, right? So I'd love to, maybe towards the end of the section, love to get some commentary on that. But just to get to the third trend, and I think this is something that most of you are witnessing, which is a phenomenon of great resignation. The entire industry is worried with this. The data suggests that since April of last year, every month, 4 million people have quit jobs and either have found newer employers or have completely, taken a break from, productive labor, etc. Right? So it's a massive, massive problem that all trends are indicating that it's likely going to continue over the next 6 to 8 months period. And in this period, we've seen automation really come to a rescue in terms of solving for the great resignation problem. Obviously, companies were very desperate in the pandemic period, and wherever they had labor issues or productivity issues, they were very happy to bring in so-called bots into the ecosystem to get the work moving or keeping the lights on. And that obviously is a very strong value proposition that will continue to stand on its own. But the outside of this, also just eliminating people with bots, there are other constructs like freeing up human productivity, human time to focus on more interesting creative work and not investing time on mundane. And as a downstream of that, really impacting or really attracting quality talent to come and work with you, because all you're offering them is really innovative work, and creative work, right? So clearly there have been a lot of case studies like that. And like I said, pandemic was a little bit of a desperate period for everyone to tie back to automation. Going forward, companies will be a little bit more deliberate. They've seen the power of automation. They will, make a lot more informed choices as we go forward. But the question really that comes to my mind as I look at this whole HR wave of opportunity, right? Data suggests that there are 400 newer platforms that sprung up or that got funding trying to solve for HR workflow automations, right? And the group that's there today, the 15 CXOs that you are on the forum today, my question to all of you is that, are we at a point, is this community at a point where you seem to have missed the opportunity on tapping into the HR opportunities, right? HR kind of addressable market, because this was very, very fragmented and companies were very desperate to try their hands with any and every technology. And now there's no, at least for the next 6 to 9 months, there's no looking back. And we quite honestly didn't see any of the prominent platforms make a very strong pivot towards addressing human resource use cases. So I'd be curious to know, is that a bus that you've missed, or is that something that you would like to kind of focus on? Carol, you seem to have an opinion on that, so maybe I'll turn to you for this.
Yeah, I'll comment on a couple of things because there's a lot in this statement. So first of all, I don't think that the Great Resignation can be solved with automation. I think there's a lot more at stake. Obviously, in the pandemic, what we saw is that People who joined the company in the pandemic have also moved on. So there is this bonding, not being in the office, not knowing your colleagues, not having any cohesive bonding with your peers probably has something to do with it. We also know that the gig economy is coming, and we'll see more contingent workforce. And on top of that, it was a very bad time to move jobs, right? So coming out of the pandemic, people will start looking for a new job. Job safety is kind of like, okay, nobody wanted to move for the first 18 months, and now I think we're seeing the results. So I think you shouldn't try to correlate the Great Resignation with automation. Having said that, the experience and employee experience that we talked about obviously is incredibly important in the war for talent. If your onboarding is still the way you onboard employees is in the 1980s, and they have to wait months for laptops or weeks for laptops and the security badge, et cetera, or in these, now working from home, it takes you forever to kind of, get them productive working from home, you're not going to attract and keep your talent. So I think this is table stakes. This is what you have to do in order to compete in the war on talent. At ServiceNow, we have a vivid HR business. And I always have a little bit of a problem with the word automation versus modernization. I think what we're seeing in global back office and global business services in general, whether it's hire to retire, procure to pay, order to cash, accounts payable, those is where the opportunities are for a modernization with low-code apps, with new apps, with replacing old legacy systems, as well as augmenting that with automation, meaning if you can apply a conversational interface, a virtual agent, if you can completely make it zero touch for an employee, partner, or a customer, you should, right? So I think, and that's also what I see. I don't believe that the automation industry is a set of tools. I believe that the automation industry is a set of business processes codified, modernized, that allow for digital transformation. And yes, automation is a big part of that. And that's why I also believe we see the convergence of low-code app platforms with RPA, with iPaaS, with virtual interfaces. Because standalone, if all you have is a hammer, then you're not going to solve the world's problems with nails. So I think that's the thing. Now, coming back to your question, have automation industry missed the boat on HR? I don't think so. I think there's still a big opportunity. I think some vendors are doing better than others, but I think we have seen that automation use cases first popped up in finance and in IT. So I don't think it's a question of missing the boat. I think it's basically a question of like, hey, where was the first demand? And obviously, then we gravitate towards those. So, one last comment I want to make on the previous, we talked about interest rates going up. I just wanted to point out, like somebody said, like, hey, less vendors, more activity, less vendors. Completely agree with that. One of the downfalls of, interest rates is we've also seen that tech stocks have become, the multiples have become incredibly under pressure, which means it will be very difficult for a lot of these folks to raise a lot of capital in the last 12 to 18, 24 months to generate a return on that capital. So I think it will be a tough time for startups. It's a tough time for people with incredibly high valuations that now have to make this a reality. So yes, there will be more spending, but I also think, the consolidation, the shakeout that we see in the industry will continue as a result.
Awesome. And I think there are a lot of people raising hands. I just want to blend in another point of view, which is really this whole wave of globalization that picked up in the pandemic period because companies wanted to go wherever the talent was. And a lot of global destinations and emerging markets became a lot more popular. Latin American markets became popular. Eastern European markets became popular. Are we at a point where this talent globalization and automation are starting to compete with each other, or they are complementing each other, right? That's another question I want to throw in the mix. But Ronan, you are raising your hand. Love to get your perspectives on some of those.
Yeah, thanks, Praveen. I think in the previous slide, the numbers you showed, they really speak to the situation. It's absolutely staggering. I saw another statistic that I think in the last 12 months, 19 million people in the US have changed their jobs, which that number is interesting. But what makes it more interesting, it's the largest number in history of people who have changed. And then I think it was Aviva who came up with the statistic from November in the survey around the UK, that 2/3 of people are considering changing their jobs in the next 12 months. So So it's absolutely massive. And to your point around HR automation, it's not HR people who are quitting in droves. HR is trying to figure out, using data engagement, O&A, and other data-driven tactics of how to retain people. But what the key issue is, it's partially to do with the hybrid work, but that's not the key issue. It's around employees wanting to feel valued by their employer, right? And it's around the values that they contribute. And so if you look at the types of jobs that are being automated just from these examples right here, these tend to be high churn jobs, right? 30 to 20% churn. So it begs the question, how valued does that employee feel if their employer is telling them you can be replaced? And I think that's the key. And so it's not just around automating this. I think any company here that's represented here that's not also looking to upskill the employees of their customers is doing them a disservice, right? We've seen on our side, the numbers are actually quite staggering. Li's community jumped from 400,000 developers to 500,000 in 6 months. And when we interviewed them, a lot of them have their day jobs in companies just like that, but then want to get into the automation space, certainly to make a little money, but also to up-level their skills and be more marketable. And I think that is a very fascinating trend as it pertains to the ecosystem that all of us build around us.
Absolutely. Thanks, Ronan. I think Bobby's also putting a comment on the chat, and the whole positioning around labor shortage, I think is a pertinent one because, the requirements in every job function are pretty steep. And if automation can augment existing available skill pool, and if companies resonate with that, enterprises resonate with that, I think it can all be a win-win proposition. But John, you are raising your hand as well. What's your take on the role of automation for HR and the whole globalization versus automation debate?
Yeah, I think that everybody is probably, I see some of the chats going on from Ulf and others, and Carol, I agree that, look, we are in a pretty dire position right now with the lack of carbon-based workers not being available to employees. Just one statistic, and we've got a whole team that has been helping me build the strategy and the way forward with even some of our more advanced technologies now. And it really shows that kind of the snapshot of what's going on. There's 10 million available jobs right now in the U.S. economy based on mid-January reports. There's 8 million available workers based on the other data pools. So you've already got a $2 million short or 2 million person shortage in that regards. And yet the companies are finding that, again, you have, which has already been pointed out by Carol and others, that you're now beginning to continue to see the resignations and job swapping going on. So I think, again, what we have available to us isn't as has been pointed out before, is not bringing in an entire suite of multiplicative types of automations that oftentimes overlap when you're inside of big companies. Like when I worked for some of the biggest banks in the world, we had 5 of everything. And so there wasn't really a way until recently for us to be able to look at the technology and put it into a platform. So you have a multidiscipline, or, what we look at is how do we begin to augment the human capabilities by adding other IA and AI tools into our Blue Prism platform as an example. And so that you can begin to replicate the competencies that are required to do work in the places in our organizations. And that goes across HR as well, front office, mid office, and back. And, we're seeing a lot of this kind of theme that we're working on resonating with some of our largest customers. I mean, some of the huge international banks, our insurance companies and such, where we play a lot with those folks. And so, again, I think as we go forward, we're in a time now where we're going to see faster job swapping than what we've seen before. You're going to see employees based on, again, this is all based on our research, employees that, as my previous colleague just mentioned, the humans are looking for work that is fulfilling to them. And so we began to swap the questions we've asked our customers in the past. In the old days, you would hear people come in and say, well, what do you want to automate? Where can we go automate? We're swapping the questions now, and we're posing to our customers, what kind of work do you want your employees to do? What is that experience that you want to be able to deliver to your customers that only your employees can do? And then let's look at the alternatives to take away or repackage or reimagine how the other work could be done. And so that's really getting some very strong positive reactions. And, to be able to build the technology to help support that, but also the services around that. How do you help customers rethink work? How do you help them reimagine the way they're doing something today, given all this plethora of technologies available, and help them simplify their choices, help them simplify the way that they look at the work, and what do you need to get that done? It's not going to get any better. I'll leave you with this. We were doing a bunch of statistics investigation on what is the future of the workforce going to look like, not about skills or anything else, just bodies, how many people were going to be available. The numbers coming down, number one. The complete switch between baby boomers and Gen Zers is going to be, in the next 5 years, Gen Zers will be 25 or 75% of the workplace. And the behaviors associated with the Gen Zers is much different than the baby boomers, and we know that. The other problem, which is very interesting, for the first time in over, I think it's about 60 years, every country but India and China's about neutral, has had a decrease in birth rates. So whilst we might be thinking about it for the next 2, 3, 4, 5 years, if you look at the number of babies being born into the world today, that number is just decreasing. So somewhere along the lines, I think there's a big opportunity for us in a very responsible way to help organizations that have this labor shortage, and then help them also retrain people for the jobs that they're going to need as they look forward for the next several years.
Yeah, I don't think yeah.
This is Chris. Can I jump in real quick, because Bobby Patrick has us all riled up in the chat engine over here. So John, I completely agree. And Bobby, I also agree. I think these are two distinctly different topics. On the Great Resignation, I think it's, John, to your point, it's a great reprioritization. People realize that they have choices now. And so they are reprioritizing what's important to them, and they're making decisions that are best for their life as opposed to their career. And I respect that tremendously. I do think, Praveen, you're going to see that number continue to go up. Part of that is those that have already made a job switch, making another job switch. And so we're already seeing sort of boomerang effect, right? People went out based on, the gift of equity and the deep pockets of VCs and having all of this funding. And that's starting to shift now from these high valuation sort of growth companies that were buying talent to now all of a sudden going into cost cutting mode. That's going to happen very, very quickly here. And so you're going to see a lot of boomerang activity. Therefore, the movement's going to continue to go up in the next, 6, 12 months. But on this labor shortage, Bobby's really onto something here. And I think he's just sort of tapping the well here. I think if you think about what's going on right now, this labor shortage is going to persist for some time. And here's why I think that is. I think if you look at the more experienced portion of the labor market, the graybeards, if you will, I'm in that group, baby boomers or whatever. 401k is near an all-time high. I know they've taken a hit in the last couple of months, but they've got the opportunity to just tap out and say, this shit isn't worth it anymore. I'm out. And so they're going to tap out. They are also starting to die off. They are leaving. This is the largest intergenerational wealth transfer to date, $30 trillion going to the millennial generation. They now don't have to put up with this shit either. They are going to opt out and again, take on more purposeful sort of life endeavors, whether that's creating their own businesses or hiking the Alps. I don't know, but they now have a choice. And then I think the younger generation, they're investing in crypto, NFTs. They're realizing some decent returns now. Why are they going to go to college, go through this, take on a lot of debt, and then go into a job where I'm told it takes, 10, 15 years to climb this ladder to get to middle management? They are reprioritizing as well. So I think across the spectrum, we have absolute challenges that is manifesting itself in this labor shortage. And yes, I think automation will benefit from that because businesses have to fill that capacity somehow. And if they cannot bring human labor on to fill that capacity, they are going to turn to this. And so thanks, Bobby. Thanks for getting us all riled up.
Yeah, no, I think I don't think I disagree with any of that. In fact, I loved John's perspective on changing the narrative from what we can automate to what kind of experience we can deliver. I think as an enterprise, all of that makes sense, though my question was very specific to this supply community that's represented today, right? And because of the fragmented nature of the opportunity and because there are like 400 different technology platforms leading with the narrative that we're discussing here, my question in a closed room setting like this to all of you is that how do you plan to win in that segment, right? Because that market is either getting dominated by larger platforms. So, companies like Microsoft, IBM, to a certain extent, Carol's organization, ServiceNow, to a certain extent, Nintex, which is very, very deeply focused on Ops Pro. They are a little bit better positioned to address that market, but most of the other automation platform companies are going to be just one of the many solutions that fit into the hire to retire value chain, right? So how do you plan to tap into that opportunity? Is this going to be a bunch of partnerships that you need to make? Is this going to be a product strategy? That's the real question I wanted to get to. Right?
Yeah, I think so. This is Ray. I'm with Connexium. From what I'm seeing is we're kind of a niche play from an automation perspective. We delivered 100% accuracy to our customers around specific areas: order to cash, procure to pay, and manufacturing and distribution. Mostly what I'm seeing in my mature customer is a center of excellence approach where they're saying, okay, I'm going to automate, but I'm going to automate certain tasks with certain tools and other tasks with other tools. So we've seen, at least from my perspective, customers who think automation is a hammer and everything's a nail. We've not seen that work. In fact, we've seen customers come to us and say, hey, I tried this approach, but for this specific use case that you solve for, it wasn't good. It's a great tool. It just didn't work with your tool set. So I do think partnership is going to be a play. I did one with a company called Celonis in the process mining space. I agree with some of the points made earlier. So I don't think the platforms are the platform players in our broad category are robust enough and have the right features and functionality to deliver across every use case in a company. Just my opinion.
Yeah, and
I'm gonna disagree with you there. I don't think HR is broken. Work is broken. So the people that are gonna win are the people that can help fix work. It's not necessarily about going in and optimizing hire to retire. People, when you're hiring someone, they don't look at, how do I submit an expense report or something? There is the work fulfilling. Do I have to do a bunch of boring crap? Now that will impact retention, right? If everything is horrible in the experience of actually doing your work. But I think the winners, when you're talking to an organization and you're saying, I'm going to help you with retention or help you attract the best people, it's not about how to optimize kind of one little component over there. It's really how do you deliver that better experience? It's how do you fix the nature of the job that they have to do so that these people enjoy, coming to work every day.
Oh, yeah, I agree. But to suggest that the requirement need for, say, a sales order is the same as a different type of a document with less revenue impact or customer experience impact, we've not seen that from our customers. So, I do feel like there's going to be a multi-application approach, and companies, if they just try to solve for it with one platform, are going to have frustrated stakeholders across different functional areas.
Yes, and yet you will not see, 100 different applications in regards to automation in this organization. It doesn't make any sense. So at the end, yes, you're right. Probably, they will use, few of, the relevant or the most relevant platform in order to solve their needs. But, and again, I think, taking the entire market through different use cases, it's also, I think that in the ServiceNow situation, I think the approach of having set of tools that can be either, run isolated or can be orchestrated by, one environment, that should be the approach within this, regardless service now, but, from an automation point of view, if you own the data, if you understand the business, and then you can choose the best platform per your use case. And again, it shouldn't be 10, 15 or 20, but it should be 2, maybe 3 the most. And that would be the main value for this organization.
Absolutely.
I just want to comment one thing. I think we're I think we're overstating automation for retaining talent.
Yep.
I think it's table stakes. I'm going to repeat myself. It's table stakes. If I can order something online with 2 clicks with Amazon, why is the procurement process internally so dreadful, right? So I think it's all table stakes. But don't forget, people leave managers and people leave toxic cultures. That's the number one reason why people move on to a new job. My job is not fulfilling. My manager is not, is not a great person. The culture is toxic. Those are things you can't change with automation. That is all about creating a healthy culture where people want to work in. And I think that social coherence between teams, building strong teams and having human connectivity is why you retain employees. And if you have that strong, they'll even fed up with some broken experiences. But the other way around, no way, right? I have a great experiences in a toxic culture. I'm going to look for another job. So I think, let's not say like, oh, we can fix everything with automation. It's just not true. It is table stakes. People are fed up. If you can't automate it, you should automate it. Let's not have repetitive work if it's not needed. Totally agree with that. There's cost savings, but it's not how you're going to save your best talent. That's not it.
And at least in this Kaushal, at least in India, what we have seen is, of course, there are things that you can automate in HR, no question about it. But definitely, it's not towards retaining employees. You can, of course, improve the experience of employees, but that's not about retaining employees. One is, over last 2 years. There has been such a huge flow of capital, and as a result, there are so many companies that have received funding, and there is a fight for the talent. That's one part of it. Second is also, at least I believe that by working from home for such a long time, we have broken that social connect with employees, and I know for sure that at least there are 100 employees that I have not met with that we have hired over last 2 years, and that's such an unfortunate thing. And lot of these things play when it comes to this great resignation part of it, because you are not feeling part of the team, and as an organization you are not able to convey that because there are limitations.
Okay, perfect. I think it's a topic that needs probably a little bit more time than what we've allocated for this, but in the interest of covering other trends, we'll probably move on. But a lot of diverse and interesting points of views. Maybe we'll take this as a topic and develop a proper thesis on it in the form of a white paper and broadcast it. But I just want to collect some opinions in terms of how this industry in specific, the automation industry in specific, is thinking about the great resignation opportunity, right? With that, back to you, Nishchay, for the next trend that we can deliberate upon.
Sure, absolutely. I think extremely interesting conversations. Diving into the next one, I think the fourth one we have is around sustainability. That's another mega trend, and all the leading global enterprises, of course, are looking at sustainability in a very strategic fashion. Everyone has already taken a big bet with respect to their sustainability goals. The private equity firms, in fact, are keeping aside a lot of dry powder for ESG-related investments aligned to their portfolio companies. We also see that there's a high focus on leveraging automation as a lever to achieve some of these sustainability goals. For instance, automation technology is enabling a large-scale shift towards this paperless office with digital forms and digital workflows. And even the ESG and sustainability reporting is being automated to meet the disclosure requirements consistent, with some of the Paris Agreement, etc. kind of initiatives. So all of this is pointing towards how automation is expected to play a pivotal role in shaping up the sustainability agendas for the global enterprises. So with this background, if I can bring you on, so we touched upon the paperless office, which is one of the ways in which automation is supporting sustainability. Can you cite any additional automation use cases or low-code use cases that are fueling sustainability from your perspective?
Yeah, absolutely. So I think there's a couple aspects to it. One is when you look at the overall supply chain of an organization, there's lots of opportunities to reduce the carbon footprint. So one of the things that you can do is you can use technologies like process mining to get a very good understanding of where the processes are going, where carbon is in your ecosystem. And then you can, of course, change the processes and improve the processes to be able to lessen the carbon footprint. And that I think is something that may not even need automation. In many cases, one of the interesting things about process and task mining is you actually can just optimize the process as is without having to completely transform it and completely automate it. Now, that being said, automation, of course, is super valuable. And it goes definitely beyond paper processes. There's all types of processes that involve, time, which, of course, the more time that you spend on a manual process, that's time that you could be spending on something else and be more efficient with and help people to focus on the things that can then help move the business forward anyway. So it definitely is beyond paper processes. But I'd say that the number one place where we've seen sustainability investment has been really supply chain and process optimization. Where automation can be useful, or just improving the way that the process works out of the box. The other thing that is interesting is how do you understand the sustainability footprint of your organization all up? And that's one of the things at Microsoft we do, for example, with Azure, is we actually have a sustainability report where you can look at all of your Azure spend. What is the carbon footprint for that as well? So we think that there's going to be improvements there. And even if we think about cloud infrastructure, for example, basic things like auto scaling that save energy, save companies money. And because they save energy, they reduce the carbon footprint as well. So very simple things like just turning off VMs at night that you can automate can actually have a huge impact, not just to the carbon footprint, but to organizations' bottom lines. And those are the types of things that, just getting reporting, visibility, understanding what's going on inside of organizations can be super helpful.
Perfect. I think all relevant points, Stephen. I see, Ulf, I think you have raised your hand. So do you have a perspective you want to add?
No, I think the big elephant in the room here is actually predictability, because if you look around, if you even in your own behavioral patterns, how much don't we waste? It's not about time and paper. It's go to the food store or a restaurant or the clothing store, retail store, wherever. How much is being thrown away, and that's just mind-boggling and terrible from A to Z. So I think that we need two things. We need a complete mind change of how we consume as individuals and how we consume as corporate entities. But we also need to understand that we need automation to help predict consumption patterns, how we can improve supply chains, etc. And I think with the technology at hand now, that's a huge opportunity for particularly the larger consumer goods companies.
Sure. So basically, I think leveraging process mining and task mining technologies to really understand inefficiencies in processes, including
I think it's less about understanding that. And I think my point, I think that's important too, but my point was rather predictability, how many pairs of trousers or how many of this and that is going to be needed at a particular point for that to be consumed, so you don't have to throw it away. Sure. I have a favorite example. If you give me 1 minute, there's a small company in the outskirts of London who sell jackets, not dinner formal jackets, but jackets. And they have a completely automated marketing platform, a completely automated sales platform. So what they do is they take orders and then they have those produced to order and have them delivered. Now I have to wait 3-4 months between order and delivery, but there's zero waste.
Sure. So yeah, predictability, I think, is a big factor. Varga, if I can request you to join the conversation. I think you at UiPath have this whole initiative around automation for good. So any use cases you would like to add on top of what Ulf and Stephen had alluded to?
Automation for Good is a general, quite broad program we have, because we can use automation like we can use many other things for the purpose of doing good. And it particularly was, it started with the COVID situation, where we gave our tool and our people pro bono to help in the hospitals where nurses needed to report the number of contamination, and they were basically doing a lot of administrative work, which by putting together, by automating all of a sudden a process that was new and that was at scale, so for which they had no automation. Here, the power of RPA really came to the fore, because we're able to automate these things very quickly, thus liberating 30% of nurses' time from clerical work to actually take care of patients. So the examples are endless, and one of the beauty of RPA, of this kind of tool that we have, is the speed with which it can be deployed compared to traditional full stack applications that has been the cornerstone of IT until now. So I think it's very interesting to understand this is about, I call it fast IT, a little bit like fast fashion, in the sense that you can deploy it very quickly, but it also doesn't need to be there forever, because the environment in which organization lives changes so fast. So things need to be done fast, and things needs to be done in a more democratic fashion. We spoke a lot about this labor talent shortage. One of the talent shortages that is the most pertinent to all of us in this group is actually the talent shortage of IT. Most of our clients and organization, they're looking at our tool, because the days where you would rely on a small group of people, i.e. the IT departments, to be able to automate or digitize everything are going to become harder and harder. So one of the big aspects of our tool, of all the tools we collectively offering here, is the low code. I'm not going to use no code because it's a misnomer. Let's say the low code aspect of it, where we're moving into a co-production of digitization. So when you move into co-production of digitization, you solve one of the major headaches of organization going forward, which is the shortage in IT talent, and the fact that now automation is wavered in every process that we do, and it needs to be developed quickly. So I kind of went a little bit further from the automation for good, but the point being that can also be applied for automation for good. And it can be applied at an individual level. If people can individually create automations, they will find also ways to do this for ESG purposes, the same way they'll find it for increased productivity, better customer experience, or better employee experience.
Sure, Varga. And Gautam, I think I'll quickly bring you into the conversation. I see you've raised your hand, so go ahead.
Yeah, I'll just touch on, you asked for specific use cases, right? So one conversation we've had with clients at SS&C, because we do have ESG, and ESG is a hot topic, and it's the right thing to do. So I think we're still just scratching the surface. One of the things clients have asked us is, individually, CEOs have asked, how do I track and report and ensure that my team is delivering the promise, right? So I've committed to being carbon neutral by 2030 or 2050 or whatever it is. How do I make sure that we are doing the things that we need to do? And so that reporting and metrics piece is interesting, that the right C-level executives are thinking about how they manage it and measure it within their org. But what would be really interesting is if there could be some industry standard applied to it, right? Where instead of just giving it, lip service, are you willing to share with the rest of the world what specific actions you're taking? And I think automation can play a role in that, in terms of gathering the data, reporting on it, and being that kind of radar for who's on the right track.
Sure. A very valid point, Gautam. So yeah, I think there's real merit in this whole ESG reporting, and how do you really add value by adding more intel onto what exactly you're doing within your ESG initiatives to drive the consequent change. So with that, I think we'll quickly jump on to the next Foresight. So Prankur, if you want to go to the next trend.
Yeah, and I think so basically, I don't need to tell you this, but as technology is becoming more foundational to every business operation and every corporate function within an enterprise, there's been a lot of tussle in terms of the IT bandwidth of the company, right? And that's where we see a lot of tight interlinkage that is sort of emerging between the ops groups and the IT group. And there is dedicated bandwidth being allocated with specific technology leaders for business functions, for various corporate functions, and different units within the organization. And further, what we are also observing is that the consolidation into a whole global business services, the GBS construct, is taking place to address some of the inefficiencies that would be occurring in global organizations. And we have the case study of Pfizer that has already started to act on some of these aspects. They have dedicated technology leaders looking at technology-led transformations of functions like HR, finance, supply chain, to closely orchestrate this partnership between ops and IT. They already have this large global business services organization, which is already at the scale of almost 3,000 employees globally, looking at functions such as HR, finance, and so on. And the whole automation program, in fact, is being centered by the GBS along with close collaboration with other owners like IT and business, right? And that's where we also wanted to get your opinion in terms of how are you seeing owners of automation really sort of change with this paradigm. So I'll just pose that as a question in terms of how is that convergence of tech and ops really shaping up the automation programs of some of the customers that you would be working with. So maybe Gautam, if you I believe would be working with a lot of these different parts of the organization. If you have some thoughts around that, please.
Yeah, sure. Our low-code, no-code colleagues would have us believe we won't need IT anymore, right? But just kidding. I think one of the things that we're seeing is that, GBS and those central structures were a stepping stone. They were a phase, but more and more, companies will have to truly change how they operate and what their DNA is, and every company is different. So what we see happening, and there's a couple of clients that we're working very closely with this on, is thinking about the next stage of GBS and central service functions, and is that the right way for them to operate, right? And truly thinking about it more as to use an overused word, hybrid structures, where you can pick and choose based on what's needed at a particular point in time. So if you need IT and finance collaborating on something, you can very quickly form an org with a mandate to go deliver on something for IT and finance. If you need operations or middle office and IT to work together on something, very quickly you can build a org that allows you to get that team together and go execute on something. And I think that's going to be an evolution. It's going to take some of the more creative thinking companies to drive that type of model forward, but that's something that we're seeing that's coming together more and more, where it's not a one type of organization for the rest of our lives.
Sure, and I just want to get thoughts even in terms of are the decision-making patterns really changing with this organizational shift, right? And I see Ronan has also raised his hand. So Ronan, if you want to comment on some things.
Yeah, I think that's the question, right? Because we've all seen all manners of COEs, hybrid, centralized, federated, and all of that. Gautam certainly has. I think the trend that we're seeing very strongly, though, is a shift in the buying behavior, right, towards the line of business buyers. And when you have IT, obviously they want the platform, and then they get a whole pipeline in of requests, and they can prioritize them because the platforms can automate everything. When you have a line of business buyers, they don't care that the platform can automate everything. They're looking for that repeatable use cases as much out of the box that you can do, but can you solve my problem in claims and invoices and order management, whatever it is. And so I think where that behooves us is to really move away from these visionary sales pitches, right, where you can automate all the work or a lot of the rote work in your company, to saying, here are the use cases that I'm really, really good at, right, in your industry, and here's a whole bunch of customers who I've done it for. And I think this unlocks the comfort level of these line of business buyers to spend on automation as a business solution versus an IT solution to, like you said, in the original, in the first slide, of RPA basically connecting a few systems, which business buyers don't really care about.
Got it. So it's mostly about having a very contextual page, having a very verticalized approach to be able to, land some of these messages.
I have a more nuanced point of view, if I may say.
Sure.
I think the cloud has allowed a lot of full stack applications and things that go into very, I'm going to say, micro functions, right? And that speak immediately, to Ronan's point, to the business users, right? And they understand immediately, it's very easy to use. Like I'm in an HR department, here's an application that allows me to schedule training. I'm just giving you an example, right? So that's definitely a trend. But I think the counter trend to that's where the tension is that more and more there is a need for a universal tool that allows to indeed constantly connect things in a different way. Who could have predicted before COVID that all of a sudden you have a net new type of things that you need to digitize, and there is no already an existing application all created or for that, or something that is universally applicable and can be deployed fastly. So there is also the need for a universal tool. The word platform has been used in so many different ways these days, I don't even know what it means anymore. But for a universal tool that can be applied, used easily, and in the hand of the user themselves, to your point, Roland, so they don't depend on IT, but nonetheless with an overall IT governance. Otherwise, it will not scale. That is just a point of view that I have. So I think the two phenomena exist, one because of the other, almost, if you will. It's not one or the other.
Right. And I think, and depending on the nature and the DNA of a customer, I think one or both might work. And I think those are good, great points to have. John, I see you have also
everyone here agrees that IT lost the decision making. And
they don't make a decision in my business. I mean, it's rare that they can be an influencer in my customers, but they're not the buyer.
Correct.
I think the trend, guys, I don't know if I'm sure you see the same thing, right? We see, there's a CDO title, right? Chief Data Officer, Digital Officer, and things as well. I think the CIOs are in a position to be able to actually take and subsume those roles. And I think there's a strategic opportunity for CIOs if they federate, as evidenced by Zinnov here, IT within organizations. And if they think about every employee as an extension of IT, right? Every new hire today is technology savvy. They could all be developers in their own regard, right? Citizen develop, however we want to discuss that. So I think there's an opportunity here. And I think CIOs have the potential to step up and be a big part of the because governance is going to be critical, a big part of how that is deployed and owned within a company. So we're pretty bullish on the rise of a new generation of CIOs in the automation equation.
So Eric, I would want to get your opinion because you've been your company has been working with ops pros, and give us a little bit insight in terms of the role IT plays there versus the LOB, the quote unquote LOB driving influence. How does the dynamic evolve in the segments that you are servicing, Eric?
Yeah, so I think like all of you guys probably see, it depends on the customer. Not everybody's the same. We have 10,000 of them. So there's certainly a variety of what we see out in the market. I would say in larger enterprises, more often we do see that role of governance. Security is extremely important, making sure that they're getting the right outcomes and efficiency. And so I think in these larger organizations, the CIO and their organization definitely has a role to play. I would also agree, though, that those in different groups call them different things, but the whole, think of your centers of excellence, your process COEs. They typically have a large amount of line of business funding and direction setting and power, but it's combined with IT. And so we see the two coming together. It tends to work pretty well for us because we have two components of our business. One, we're trying to help organizations understand what their processes are. When you look to try to change a business and you've got all this turnover of employees, understanding what processes are so that you can bring people on, you can prioritize what you're going to go work on is extremely critical. Then the second component of what you go out and where you spend your time on automating. I'd also agree with a couple of the comments recently made around the fact that more and more people entering the workforce, they are tech savvy. The projects are not getting delivered just by professional developers anymore. Well, obviously, all of us on the phone today are here driving companies that help a wider range of people be able to deliver automation and be able to deliver applications. So I would say at the end of the day, though, Praveen, there's not one universal answer. I do agree with some of the things in the chat window. More and more spending and more control is sitting out in the line of business, but make no mistake, due to security and some of those priorities, I think IT still has a role to play.
Got it. Thank you. In the interest of time, Prankur, should we cover just one more trend quickly while we have everyone?
Sure.
All right. So this one probably is a hot trend that everyone's talking about, which is really about horizontal expansion of use cases into IT world. And I won't preach the choir here. I mean, all of you have your narratives and stories evolving and getting built up. The only question I have is, and maybe Carol, I'd invite your opinion, because if you look at IT side of the equation, if you look at ITSM, ITOM components, it's been a pretty well-established software industry, right? The companies, the likes of CA, BMC, Hitachi, more recently ServiceNow, even Microsoft have dominated the ITSM, ITOM space significantly. And you can call it automation, you can call it software, whatever, but the processes are by and large automated, right? So what is this new excitement with IT automation? Why are RPA companies or workflow companies suddenly getting excited about this space? Is there anything real, meaty, newer white space opportunities just companies trying to kind of inflate the opportunity that may or may not exist in the IT world? So how are you seeing the opportunities in that market?
Yeah, I think what we're seeing here is I'll keep coming back to modernization, transformation, and automation as three different words, but they do not mean the same thing. So you can use automation to keep your legacy stuff alive and bring them into the era and squeeze some more juice out of them until you are ready to replace them, right? Like, and that's what we do a lot with RPA, because we got 40, 50 ERP environments that are all old and legacy, and we can't possibly move them all out within a year. But ultimately we will. Like, there are lots of clients that I talk to, they're on this SAP migration or Oracle migration and consolidation. And in the meantime, they use automation tools to kind of stitch it together and keep it alive. That's not a long-term business, though. Workflows are moving to the cloud. People are moving to Workday, Salesforce, ServiceNow, Adobe, everything, Microsoft Dynamics in the cloud. And they are completely rethinking their business processes when they do that, right? And they're rethinking their core business processes because there is a different demand for a customer experience, because there's a different demand for an employee experience, because we do things in a new way in a new world. So, the vendors and the platform providers like Salesforce, Workday, you name them, I named a few, ServiceNow, who are in these businesses, will use automation to also make it easy for customers to bridge that gap from the old world to the new world, making the migrations easier. And I think that's what we're doing. So I think, this standalone automation, I don't see it. I just don't see it. I see modernization as part of that. We need automation. I see new experiences where virtual agents and conversational interfaces are there. I see extensibility, which needs to be driven by low-code platforms for existing business processes, because that's the new world that we live in. So I see the convergence of all these. I see one, and I think Harel talked about understanding. It's like I think where Celonis comes in is understanding the old world. We can analyze SAP workflows. Process and task discovery comes in to understand how repetitive work is done by humans. That all leads to a blueprint on how we want to transform and modernize. And that's the blueprint where you use either a ServiceNow or Salesforce, depending on whatever process you're doing, or a Coupa for your procurement or whatever it is. When you rebuild those workflows to the cloud, that you need that blueprint to kind of put into the new world. That's it. In some organizations, this is happening today. They're modernizing extremely fast because of the pandemic, because you can't close the books, quarterly close. If you're not in the office and you have a legacy IT system, that was really hard. But people are now moving their close the books and finance back office processes to the cloud, because we live in a new world where everything needs to be in the cloud. So the pandemic has accelerated, the shift from moving workflows to the cloud. It's accelerated the shift to actually rethink your core business processes. It's opened up new opportunities. We see ESG as a driver to rethink business processes. And so I think, these things need to go hand in hand. And I think that's why we see the consolidation in the industry. That's why I don't think there will be business apps that do not have automation included in the next couple of years. All of them will have automation included, whether it's AI, conversational interfaces, low-code extensibility, integration capabilities, RPA, process mining, process optimization. It should all be in one platform, plus out-of-the-box business workflows. And that, I think, is where the industry is going, and it's going there really, really fast.
I think you're making a very important point, Carol, in terms of the whole native automation coming into some of these biz apps, and the fact that companies will always, as we go forward, there'll be a little bit more focus on modernization and cloud versus band-aid solutions on legacy. With this, Bobby, if you're still there on the call, it'd be good because UiPath has been trying to create a lot of noise. You're predicting 2022 to be a foundational year for IT automation. What are you seeing different than Carol, right? Because Carol is making a very important point about the opportunity becoming a lot more specific. And if I paraphrase what Carol said, that would also mean that the RPA vendors or the incumbent automation vendors may or may not be able to win that market, right? Because it's all about apps getting native automation on the IT side. So why is UiPath excited? What are the trends you're spotting in that segment?
If I had a nickel for every that argument that I've heard since 4.5 years ago when I joined, Gartner put RPA as with the red X in their hype cycle 3-4 years ago, clearly wrong, which I think is there. People always kind of overestimate the speed at which technology moves, and I think RPA actually has been the one technology, thanks to speed to market and time to value, that has actually been able to deliver outcomes, which is why business loves the technology so much. So I think I think if it's RPA of yesterday, well, maybe so, but I think the automation is evolving. The one thing I'll say is it's hard to disagree with what Carol said in a lot of regards, but the only one thing I would heavily disagree on is the word modernization. Frankly, I haven't heard that word since I was at HP 4.5 years ago used, and it's a term I don't think that we don't hear from our 100 plus CIOs on the advisory boards and things. So I just don't think that's the right term to use as well. I think people are looking to evolve fast and deliver outcomes faster for their business. They want to see outcomes in days and weeks, not months and years. That's what automation is delivering right now. And so I think, whatever you want to call the category is going to grow. This year is going to be a huge year for the category of automation, for the TAM, for what we all deliver as a group, and for the outcomes. So I don't know what you call it in the end, but I think it's people love the speed to outcomes and time to value equation, and you just can't get that from most areas of B2B today. So I think that's what makes it win. I don't think it's about modernization.
Hey, I would like to add a couple of things, if you allow me. I really, it was very interesting to hear Carol's point of view. And there is a mental model that he's describing, which is there's an old world, and then cloud is the new world. We move the old world to the new world. End of history. That's a mental model that we at the UiPath don't believe in. We don't think it's like that. We think it's a constant change, as I was trying to mention it before. So that some people will move from on-prem to the cloud, there is no shadow of doubt about that, and then everybody will actually move. But the fact that then it will be solved forever, and that it's static, and that it is a single platform that will solve it all, it is not a vision that we subscribe to, and I mean that we feel.
Sure. Thanks so much. I know we are at the top of the time that we're planned for, but please feel free to continue to stay on the call. We'll just try and cover a couple of other trends as well. In case you need to drop off at this point, we really appreciate your time and thank you for joining our community. We'll continue to build up this community and keep sharing content and perspectives as we gather. A lot of interesting insights came out of this session. We are going to be blogging about it or writing white papers about it, and we'll love to present and come and interact more on some of those trends as we go forward. But just to continue the discussion, Nishchay or Prankur, what are we talking next about?
I mean, can I just jump in and make one last quick point regarding this one before I also need to drop off? But I just wanted to mention, I think we have a bit of a blind spot in terms of the way industries transform, and obviously a lot of companies became IT driven over time recently, and I think what we are going to see, not tomorrow, not next year, but approximately in 5 years, is many companies will actually switch to autonomous first. You can see some forerunners of this in crypto. It's extremely immature so far, but I think long term this will be a large thing a couple of years ahead. And I think automation technology can actually be a huge enabler for those companies to interface with the outside world. So maybe that's something that's in a bit of a blind spot of us because it's not really a thing yet, or pretty obscure, not really working well. But I think it's something worth considering when thinking about a longer term strategy.
That's a great point. The entire Web3 construct, decentralization, blockchain enabled, quantum leaps. I think those are things, interesting trends to watch out for, and absolutely great point, Peter, in terms of the blind spots that kind of exist in this market. So really appreciate your inputs there.
Quickly on the next one, next we had was around how automation is emerging as a new frictionless enterprise UI. So as we're all aware, I think any typical enterprise today has hundreds of enterprise applications, and this warrants an employee to toggle between as many as 40 applications to get their work done. So automation really is functioning as a UI layer sitting in between the employee and the enterprise apps, integrating all the data and business processes from multiple apps, and then providing the single interface to employees to get their work done, right? And we have this example of Microsoft Teams that we can see here as a single interface, which is integrating at the back end with more than 600 applications and enabling this HR executive to get all the work done seamlessly, right? So that's the key trend that we see shaping up, and augmenting this automation layer further with the power of conversational AI-led voice interfaces leads to an even more powerful and frictionless tool for employees. So that's the key foresight that we have on this one?
I think, Ronan, you are in the conversational AI space, and it'll be good to get your final thoughts on the whole converged opportunity, enterprise UI opportunity. I mean, Teams has clearly proven it, like Nishchay said, but are there scenarios like that, like platforms like that, that might be industry specific or LOB specific, and they'll become the front end UI? Is that a trend that resonates with you? What are you observing in the market?
Yeah, so the view from the trenches on our side, since we have the conversational AI, which is integrated with IDP and RPA and process mining and a few others, is that the connections are very strong. Now, it's quite interesting to see the initial conversations with the customers, right? To kind of see, okay, when you start to prioritize where to start and how to scale, it can go any number of ways. But we definitely see a very different behavior when the conversational AI piece is being discussed. And interestingly enough, it's not always the customer-facing, service chatbot, sales chatbot. There are massive automation potential with the internal. HR is obviously the one that we're all mostly familiar with. But around the finance, supply chain, and that integration point with the other technologies like RPA is really what brings it alive, because some of these are used as the chatbot as an entry point to do things like building a knowledge base and conducting enterprise search around construction projects. That seems to be a very popular use case that we're seeing. But the real key trend is, why should I need to figure out how to use the application and logging in and all of these things versus just telling the bot, go find me all of the construction projects between January and June 2019 that we did in Florida that have to do with sewage plants or something like that. And that ability to parse and understand context and, of course, adhere to security is where the more advanced type of conversational AI seems to be driving just massive impact. And so we're really seeing this being top of mind with customers.
I think this is going to be an interesting trend. Obviously, the expertise of the bots in parsing a specific process is building up every day. I think the next sort of evolution we're predicting is that the front-end interface will be able to automatically connect back with a lot of back-end applications. And as a user, what gets automated is the interaction point, right? So instead of interacting with multiple applications, you get to interact with just one interface, and that interface at the back end does all the magic, to improve the productivity of this particular individual, right? So Teams has already done that for a number of use cases. Our expectation is that while Teams is a horizontal platform, you should start seeing similar platform emergence for specific line of business use cases or industry-specific use cases, right? So equivalent of this is already available in PTC, for example, which is trying to do something similar for frontline workers on their augmented reality platform on the manufacturing side. So we already have some weak signals of companies coming in that sense. And the expectation is that going forward, more and more industries and horizontals can benefit from a frictionless UI that can be offered to the end user, right? So hopefully that trend span out over the next several quarters. All right, perfect. Thank you, Ronan. We appreciate your time, and like I said, we will distribute this material, and we'll keep picking trends from this and double dive on that. But I really appreciate you taking out time for this. I hope you enjoyed the session, and feel free to share your feedback and comments to make the next session even better. Thank you so much.
Thank you.
Thanks, Ronan.